What's up, everybody? Tom here with another video. Well, Jerome Powell has just been announced as the new nomination for, of course, the Fed chairman once again, and it looks like the market is having a little bit of a hissy fit about it. Did they really expect a change, or is this just the catalyst for a short to start happening across a whole bunch of currencies, commodities, and of course stocks? We'll be taking a look at the S&P 500, Nasdaq, Bitcoin, gold, Tesla, Apple, and more to try to get a bit of an idea of what comes next after the Fed comes through with another 4 years of Jerome. Stay tuned to find out more. All right, guys, well, we're going to begin this market recap for the markets closed 22nd of November. That's Thanksgiving week, the first Monday, with a little bit of a difference. And I just want to quickly discuss some big stats that we've seen come through over the years. Now, I've been looking at Thanksgiving for a long period of time, and I can tell you that there's certain stats that seem to apply during this week. Those stats are that usually the Monday and the Tuesday have been weak throughout. So you usually do have this little bit of a dip. We kind of expected it as a community. We've seen it before. There's also a 2/3 likelihood that the market will actually be green before the day of Thanksgiving. So of course, Thanksgiving is Thursday. The Wednesday has a large likelihood of being a green day. So does the Friday, even though it's a half day. And the Monday afterward is 71% likelihood of being successfully green. So there is some big stats that happen around this time. And is it little surprised that we've seen the market get a little bit pissed off at what's happening with Biden and, of course, the Fed? We've got now Jerome for another 4 years. It seems inevitable he'll get voted through. And what the market said was, whoa, we're not that happy with this. Why? I guess it could be because Jerome is not going to sit back forever and not raise interest rates over time. So that is that we have seen a strong US dollar. We've obviously seen US 10-year get very large. And that is going to be a concern that the market's going to be looking at. But remember, these are all knee-jerk reactions. The market was going to do what it was going to do anyway. It was just setting up for it. We were at resistance on the S&P 500, which means the top and the really key zone. And whenever you're at a key zone ahead of big news, the market will dictate the next big, large kind of movement regardless. Let's have a look now at what happened. So Amazon was down 2.83%. Tesla did go up. It actually went up more and then came back down. And Apple was probably one of the biggest stories. It actually hit our target for the end of the year, and it did it in about 4 days. 165 was reached and then sold straight off that zone. So we'll take a look at that. Across semiconductors, across communication services, and even some of the financials, all of those were down and getting really smashed throughout the session. But you'll notice it wasn't across the board. When we take a look at the S&P 500, Nasdaq, Dow Jones, all these ones, the Nasdaq copped it the most, with the idea that maybe we will be seeing an interest rate hike, maybe sooner rather than later, thanks to Jerome's reappointment. And the market didn't like it. You can see, sell to the close. What is this telling us? Well, the buyers in the morning are usually the retail crowd. This is where all of the retail investors generally start to invest. Now, at the end of the day, this is where the big guys come out to play. And if they're selling into the close, usually that leads to further selling in the futures market afterwards. And that's what we have seen so far. We'll take a look at that soon. But every single one of the markets ended up pretty much down, except for the Dow, which was up 0.05. And it was all led by some of the big gainers. So we didn't have things like technology being the best for the day. In this case, it was one of the worst. XLK, XLC, semiconductors down. Of course, gold taking a big smashing. We'll have a look at that soon. And solar index 2.31% down. So all of these sectors were down. And really, it was just some of the more defensive sectors, the financials, the energy, the consumer staples, the utilities that were up through the session. Let's take a look at the VIX. So this has been climbing. This is the fear index for anyone that's not sure. So we call it the fear index. Basically, if the volatility of options increases, this thing increases. And it's been now jumping up off our 15 base for quite a few sessions. This is a weekly. So for multiple weeks now, the market's been going up, and so has the fear, so has the VIX. Now, we know there are some key important zones. 20 is one of them. If we get a closure above 20, that tends to lead to some impulsive algorithmic trades. And because there's so many robots in the markets right now, the markets tend to have that really large level of volatility that comes through. Usually a key support is broken, which we'll be taking a look at later on in this video. And that's a key zone to watch. So 20 on the VIX will be something we want to watch. Another thing we want to watch is US 10-year inflation. So this is the US 10-year interest rates. This basically shows us what the interest rate is expected to be in 10 years. And this is now up to a 1.63 figure. So we actually have an inverse head and shoulders style pattern here. This is the left shoulder, this is the head, this is the right shoulder. We have a breakout that already occurred. It came back, and then now with Jerome at the helm once again, it seems to be coming straight back through. So a lot of people believe the Fed can't control inflation. I'm on the post that I always believed inflation would come back, especially with so much monetary stimulus, but I do think it will be controlled. Now, that's my personal opinion. You can totally disagree with me. That's okay. We're looking at the technicals, and the technicals so far are saying, let's go up and let's watch this US 10-year come through. And I would like to see it bust this 1.7, in fact, bust the previous 1.75 highs and move towards 2%. Now, most of you will know this by now. What happens when the US 10-year goes up? Usually the Nasdaq goes down. Now, it doesn't always work that way. It's more when it's in an unknown. So if we enter past this 1.75 level, we'll enter the unknown. And when that happens, expect the Nasdaq to really cop it should it happen. And we'll be watching that. The other big story has been the dollar index. The US dollar continues to strengthen and strengthen and strengthen. And we've really followed this trade now for months here on the channel. Ever since that double bottom broke through, we've been incredibly bullish the dollar. It takes time on these bigger patterns, just like gold, which we'll take a look at soon, to come through. And when it starts to explode, it explodes very hard. And you'll notice it's going towards that 97. And it's a huge reason why gold and silver were down throughout the last trading sessions. Dollar index so strong. Anybody trading Forex right now is loving it. They're probably shorting the euro, shorting lots of pairs versus the dollar index. And it's just been a trade that keeps on giving. Huge closure here above this moving average, above the rejection here of the shooting star. It's following a 4-hour 20. Let's just have a quick look here at a 4-hour 20. So if anyone's been able to recognize that pattern, very well done. And it looks like it's kind of going towards that 97 level. Probably find some resistance around that area. Let's move over to gold. So this is definitely the elephant in the room. We expected a little bit more strength here from gold. We did always know as a community this support, this resistance was going to be a tough one to crack, at least initially. And what you're hoping for at this point is the gold goes back down to the 1832 zone and finds support. Now, I want to reiterate a few things here. We've talked about the December run. So we've talked about December being strong 1 year, 2 years, 3 years, 4 years in a row. So it's been strong 4 years in a row. Every December has tended to lead towards green, bullish gold trades. Where is gold right now? So it's come back down to the second support zone. So the first support's here. It's at the second support around that 1800 to 1810 area. This is where you need these lightning bolts to occur. And I think when you're starting to pick up positions, this is the importance of scaling. Let's say you looked at 1832 and you went, yes, I want to buy that zone. Like we always say in the live streams and we always say across the board, is that scaling can help you not necessarily pick up bad positions. So you can either wait for scaling or you can wait for turnaround stories. So if you want to pick up 1832, maybe you put in a portion of your order. Maybe that's a third of your normal portion. Maybe that's a quarter. And as it shows confirmation, e.g., it starts to do lightning bolts, it starts to do double bottoms, it starts to do channels and then breaks out of those channels. All these kinds of accumulation bases where it shows you there's a huge amount of buyer demand. That's what you're looking for when it comes down. And remember, you don't want to catch the falling knife. And unfortunately, in this case, it was a falling knife. I think we remain still bullish though for the longer term here in gold. There's many reasons why this could come through as a trade. I think a lot of big traders are still looking at it. And we've still got some fairly heavy intact trend lines as well behind should it continue to fall down. We've got pretty good buying pressure that could come through. Silver's very similar. It went underneath. You'll notice here, we still have that huge inverse head and shoulders here as a pattern. We've still got that really large movement should we get through the 25, 40 in the future. And this could be a bit of a shakeout. We've had a few manipulation shakeouts. I think if you're going to trade silver, if you're going to trade gold, you need to be just so aware that the manipulation in these two metals is just insane. It isn't one of those standard trades where it's easy and you usually don't see the market come back down. These are well known to be manipulated, and it tells and it shows when you look at these levels up here. Remember, if silver was allowed to get through 30 over here, do you know what would have happened? It could have exploded back to the previous highs that we saw back in 2011. And look how high it went, all the way up to 50. And this would have been pretty detrimental to many things in the economy. So remember, this particular type of trade, especially silver here, is heavily manipulated. We need to be careful of it. But when the trend goes on, let's say it gets past this resistance, the proceeds and the speed at which this area can move, this participation zone, can be second to none. Let's move over to Tesla. Tesla here closed very strongly on the Friday session. It actually had a great Monday session. Went all the way to 1200. I'm sure some day traders had massive smiley faces on this one because they were out at around 1200 dancing, thought it was a great trade, fantastic. And it ends as a long leg doji. So that basically means we've got a high, we've got a low, and we've got the indecision, an open and a close at the same point. And now we work towards what's going to be the next session. Is the next session going to show us a bearish close like this, where it's a decision made, further shorting pressure on Tesla? Or is it going to close above 1200 and make new all-time highs? You would have to think new close above this, especially a closure on the daily, all-time highs could be coming. If it closes below, do we return back to 1,000? Some people have even started saying 900. I think it's a bit early to say such things, but certainly a very important candle, and we'll be watching it through the next session. Apple, now the gift that keeps on giving, 165 reached. I'm going to give you guys a clap if you took it. Well done. Congratulations. Fantastic trading here for a bit of a swing trader or day trader that's holding for their conviction. 165 was reached. It just smashed straight into that zone. We saw the breakout of this downward trend. It went bam, 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 bam. In 4 days, it pretty much was up there. Let's just take a look at the daily here so you can see it. 1, 2, 3, 4, and you've hit the zone. 165 was just a potential for a profit. It certainly looks pretty weak here on the charts now. I mean, what is that? It's effectively a giant shooting star. If we get follow-through action towards the negative side on the Tuesday, that won't be necessarily very positive for the markets, but we do need to remember some stats that while the Monday and the Tuesday sometimes are weak, the Wednesday has a statistical chance from 1950 onwards of being bullish, and it's usually been quite an okay day. Also, the Friday and the Monday after that have been bullish. Remember, the last 5 trading days of November tended to be positive over all of the time of stats. So you take of it what you will. I mean, obviously they're just stats. Stats are ready to be broken. But if you see the right technicals coming along with it, then you can always pay attention to that. So Apple will be one we need to watch heavily throughout the next session. Let's move over to some indices now. One of them is IWM. It looks like IWM is going to move to the bottom of our green box here. So we speculated that this previous resistance where it broke out of might have been some support. But again, just like gold, we haven't seen the turnaround story on the 1 hour, on the 15-minute timeframes. You must do that if you're going to be a trader. Investors can buy a zone, hold it for months. It goes up. They say, look at me, I'm right. Of course. You're going to just be picking levels, and an investor will do that. They'll use technical analysis to find key zones and key levels to invest in. A trader must be looking at turnaround stories and must be looking at pinpointing the real confirmation that a market's going to go up. So here we have resistances. We've got that support. We're looking now for lightning bolts, double bottoms, channel patterns, accumulation, anything hopefully around this 230 area. And I would like to see it bounce off that because there are a lot of reasons why. Let's just bring in a trend line here. Even if we go down to a 4 hour to try to get that a little bit better. There we go. So probably something around there. We do not want this being broken. Like, we don't want it to break out to the upside, come all the way down, breach that, and then get back into this range. That would be not very good for us. We're entering a seasonal period for this particular index. Usually we see strength November, we see strength December, and some in January. So I hope that IWM can hold it up. Another one that people are talking about is the FANG. Of course, this is the market index or the market stocks that have been doing well. Realistically, it's just like top 10 Nasdaq has been very, very good in the last week and a half. And that's showing a little bit of rejection. 2 weeks now testing the 5,800. Big kind of sell-off here. Maybe we get back down to the daily 20. It's bounced once. It's bounced twice. What if we have a Tuesday sell? What do we maybe expect on Wednesday? I'll let your imagination figure that one out. Let's move over to Nasdaq. So Nasdaq still kind of having issues with our top end channel. I'm not sure if this is going to hold, or obviously we did see a little breakout here, whether we come back down to the daily 20. I think the Nasdaq or the QQQ is much harder to read here. On the small time frames, it's been good trading. I mean, if you've been on something like the 15 minute and you're looking at change of trends and stuff, I'm sure near the close here today, you were excited selling that thing off because you had that little lightning bolt change to the downside. You're feeling good about it, and you certainly saw the beginnings of a short because that trend line that was going up, everything was breaking. And that's one of those things that you can look at and say, false in the morning, gets the retail trade in, sells it off, little rebound, gets more retail trade in, and then dump it into the close. A classic Wall Street move. QQQ looks exactly the same. So let's move over to the SPX, because this is really where we want to get down and dirty with our technical analysis. And I'll just draw up the community trend line so you guys can see it, because it's very important. We always have that on our charts whenever possible. There's community trend line. It goes through all the previous peaks, and it's been incredibly good at picking tops. Now, we actually haven't broken it on the main index. Remember this. This is the one, S&P 500, 500 stocks. There's no joke here. When all 500 stocks are moving up and breaching out, it's usually not a false breakout. Very important. The Nasdaq is a little bit different. It's led by tech. And if we're led by tech, then we're really only looking at one of the sectors, and we need to look at the overall picture. So we had this monthly R1. You can barely see it here, the green dotted line. This is the pivot. And this pivot has acted as resistance. So we had resistance, 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 and a false breakout. Remember what we say, confirmation close is key. So we drew this one up. Let's have a look at the 1 hour now and just look at the price action. And again, it's gone underneath this trend line. It's gone to a false breakout on the smaller time frames, and then literally reversed that after the Fed news and after it just felt like it. Whether the Fed was going to be Jerome or somebody else, the new chairman, I don't really think it mattered. I think this is just an excuse that they use all the time, and I'm not sure if it's a point to concern yourself with at this stage. The futures are down slightly. You'll notice they're down a little bit more, trading about 46.83, but really it's just mostly the Nasdaq that's down the most. The Nasdaq at the time of this recording is sitting around 16,356. So the market may drop off on Tuesday as well. If it does, let's see if it hits some key moving average points. If it hits moving average points, well, there might be a bit of a stat to come across with your technical analysis. Obviously, break it down to the smaller time frames and try to bring the overall picture together. That's what you're really looking at doing in these things. And of course, this is an educational standpoint, stats, figures, concepts here. Let's talk about Bitcoin. Bitcoin has reached the bottom again, and this presents some interesting zones. We get underneath here, well, guess what? Bitcoin to 52K. Or we now have the new concept. And I'll just quickly explain a few things that I like about Bitcoin at around the price it currently is. So we've got our A move, we've got our B move, which are equal in length. Do we see our C move? Remember, the pullbacks are also fairly equal. There's the pullback number one. Here's the pullback number two. We don't mind if it's anywhere in this green box that it pulls back to. It's all good with us. And it's done that nice little 20% now. So if we work from top to the bottom, 20% almost, fantastic. Now, a lot of you are saying, oh, Tom, you're stupid. Why the hell would you want 20% pullback? It's generally because any nice pullback in the Bitcoin markets or crypto markets is led then by very large gains. I mean, look at this. Nice pullback, points of despair, huge gain. And you'll notice something here as well, little double bottom around this zone. So if we have the potential of a little double bottom here, let's take a look at that together right now. Let's go down to the 2 hour chart and take a look at what price action we're seeing. So at the time of this recording, we've tested the lows twice. Bang, bang. We've now got a resistance at 60,000. What a great psychological level. I still think 61.5 is something important, but really for a lot of traders, it's all going to be about this. Let's see. Where are we right now? Previous support becomes a potential resistance right around this zone on the smaller time frames. We start punching through those and we punch through 60,000. Boom. We could get off, and that could be the beginning catalyst. So double bottom potential here on Bitcoin. Should it turn at this zone and go back underneath, next stop we feel is around that 52K from a technical support resistance level, and it's super interesting. Another thing I've noticed, BTC shorts actually starting to rise here. Now, it's nowhere near where it was previously during the other big dumps that happen. But remember, BTC shorts is rising. Keep it in perspective. It's quite low at this stage, but this will be something that we have to watch should the market continue to come up and this continue to rise. When the whales want to do something and they start shorting Bitcoin, we have to pay attention, and that's something that we'll continue to look at. Economic news calendar stuff that's coming out. We do have on the Wednesday some core PCE price index. We've got the FOMC meeting minutes, which will be information, and we've got the prelim GDP figure. Doesn't really matter, I don't think, too much. Really, it's about the Fed. Jerome is in, and I think the market is ready to make a couple of decisions. So let's find out whether the stats don't lie for Thanksgiving. And if you've enjoyed the video, please remember to subscribe, smash that like button, guys. And thank you so much for getting us over 70,000. I will continue thanking you because it's been a great journey so far. Let's get to 100 if we can do it together as a community. Stay tuned, guys.